Hi, Jeff, Zach. Thanks for joining me.
Thanks for having us.
Hey Steve, glad to finally be back.
It's good to have you back. Good to see you doing well. Okay, we're talking interest rates. We just recently had a Fed meeting, and coming out of that, expectations for a cut in June ramped up to nearly 70% from surveyed traders on that. The Fed committee did hold the benchmark rate at a 5.25 to 5.5. But right now we have forecasts or expectations that we probably will get three rate cuts in 2025, followed most likely um, with or preceded, I should say, by three rate cuts in 2024. So that's kind of the expectation is over the next 2 calendar years of getting a total of six cuts. We saw mortgage rates peak at about 8%. They're now the 30-year fixed is now at about 6.6, and some forecasters are predicting that by the end of the year it'll be around 6. Your guys' thoughts just on what we're seeing with interest rates, financing, what it means for real estate investors. Um, um, Few thoughts. Certainly, it's good them going in the downward direction rather than upward. I'll start off with that. That's a plus.
Yeah, it is a plus. I mean, it makes theoretically makes properties easier to buy. I think the other side is it's causing sellers to rethink the potential sales price of their properties as well. So it's trying to find a happy medium where both the sales price and the financing works.
I've been gone for a few weeks, and I knew Jeff was going to jump in there, so I didn't want to jump over him. He likes to be quick out of the gate, but I'm going to finish stronger.
Go for it.
Um, you're definitely going to get some better buying opportunities for real estate. This looks like a normalized market to me. Prior to the Great Recession, which was a 0% interest rate for a decade, which has never happened in the history of interest rates. Interest rates stabilize around 5%. And that's what you're going to see. And that's a normal rate of interest to pay. That's what people can afford. And that's going to stabilize some of these dramatic increases in pricing that people are struggling with. That being said, when you're looking at real estate right now, and you know that it's going to be 150 basis points cheaper in 18 to 24 months, the values of your properties that you buy today are going to be dramatically higher. So I think you're going to see a big windfall in the real estate sector. Um, you have to be very selective in what you want to pick. We're seeing deals that people are trying to get aggressive to sell out now because if they don't sell, um, a lot of them are getting squeezed and they'll have to hold on for that 2 years. And most of them don't want to hold on for 2 years. So you're going to see a lot of opportunity between now and the end of this year, and certainly I think by through the summer of next year.
Yeah,
Yeah,
I probably add to that just a little. You're going to see people get squeezed because they're still sitting there with low 3% interest rates on multifamily deals and other deals. Those notes are coming due soon, and they're either going to have to sell or refinance at a much higher rate where their metrics no longer work.
That's right.
yeah, I think those are great insights, actually. And I would second all of it, including this has been normalized. I mean, we saw a lot of pain last year. In the publicly traded real estate, those lost a lot of value. And we definitely saw issues with trying to get financing. It was more challenging. To your point, this has been a normalization. It was a little painful and brutal to get there. I think. But I do think we're there, a more normal market. I also think that means that people who have been waiting for like a post 2008 bloodbath are likely to be disappointed.
Yeah. Yeah.
We're just not going to see that kind of cataclysm where you're being able to get quality properties like 10 cents in the dollar or whatever ridiculousness people were expecting for. I think this is a market where you're going to get opportunities. You're going to have to look for them, and you don't want to wait for some sort of apocalypse or something like that because I mean, who knows what could happen in the future, but right now it's just not in the data.
I'll tell you that there's one caveat. There will be a small bloodbath, but that's going to be everyone over the last 3 or 4 years that thought that real estate only goes up, that we're over leveraging on low interest rates and paying higher premiums. These could be as simple as your neighbor who's a guru and went out and bought 10 Airbnbs thinking they're going to make a fortune, made some TikToks on it, looks great. that's not reality, and that's not what you're going to be experiencing. And you can see a lot of that stuff get a little messy. But when that gets messy, it doesn't mean it's a good deal and you want to buy it. If anything, it just means it shouldn't have been bought in the first place. So
Yeah,
Good
I
point.
think you have to do your research. So I think you kind of pointed on, there's some bad stuff out there. There always is some stuff you have to know well to look past. But I do think, to your point too, and you kind of brought this up, Zach, there are some quality properties with bad models where folks just went in overly aggressive in terms of what they thought that really low interest rates were going to be around there forever. And I think that's really the sweet spot investors want to, well, one of the sweet spots investors want to focus on is bad models with quality properties that are going to have to come to market.
there you go.
Point.
Selective real estate investments. We're selective for a reason.
There you go. Awesome. Okay. Well, if you appreciated this video, give us a thumbs up, click to subscribe if you haven't. Thanks a lot, guys. I'm talking to you more.
Thanks, Steve.
Thanks.